Alright, thank you guys so much for tuning into today's video. Today is March 5th, 2025, and to begin the live stream today, I do want to take a look at the economic calendar here today. So we have non-farm employment change here at 7:15 a.m. Eastern Time. And we have ISM services PMI numbers at 9 a.m. Eastern Time. And I believe that just passed just about 35 minutes ago. So we have I would say we have volatile news today. But my daily objective here, my daily bias for today would be for us to take out the daily high, right? Just simply looking based off of how we closed here yesterday. So this daily candle here, right? This up close candle, and let me just go back just a little bit for you guys. So this daily candle here yesterday, we took out previous week's low, we took out previous month's low on Monday, I believe, and then we ended up taking out Tuesday's low of day yesterday, and then we ended up reversing. Not reversing, but I guess retracing back inside the range. But let's take a look at this daily candle here. So on NQ, this daily candle, it suggests the idea of higher prices, right? Like I want to see us take out previous day high, but the one thing that I'm a little bit skeptical about is that even though that I can see even though I can anticipate previous day high as being the draw of liquidity, we do not have much displacement here, right? In this leg up. So in this move up here, right, we don't have displacement. There's not a willingness to trade higher. Like there's not a high there's not a lot of strength in that move up, and that kind of is worry. It's not worrying, but it's not showing me that strength I want to see if we're bullish, right? And so coming into today, like I said, for us to really confirm the idea of higher prices, I want to see a bullish intraday candle closure. Meaning I want to see a bullish 4-hour candle, a bullish 6-hour candle, or a bullish 8-hour candle closure to really suggest the idea of lower prices. So I'm going to elect to sit on the sidelines here for today and wait until we close here on the 4-hour candle and the 8-hour candle, right? So with the way that these two candles are closing here, or if we were to close right now on the 4-hour candle and the 8-hour candle, I would anticipate, right, for us to take out the 4-hour low. It's a very easy assumption to make. And for me, I would like to see us take out the 4-hour low if we were to close right now, right, on the 4-hour candle and the 8-hour candle. However, what is that daily time frame telling us, right? The daily time frame is telling us we could trade higher. So there's a misalignment here between the daily time frame and the 4-hour / the 8-hour time frame. If that were to happen, you can't use the daily time frame as a higher time frame objective, right? You would have to go down onto maybe the lower time frames, and you would have to maybe go down onto the lower time frames, such as the 4-hour, 6-hour, 8-hour, 10-hour, one of those time frames on the intraday time frame for a bias, for a higher time frame objective. So yeah, coming in today, I don't really have much of a bias. I'm not going to try to force anything. I'm just going to allow prices to do its thing. I believe this move down here, to be honest, this leg down, has been quite bearish. So from previous month's high, actually let me take it from here. So from this first initial move lower, we have moved almost, we have moved 1,700 points here on NQ. That's a lot of points. And this was, I believe, yeah, so last week on Monday, last week Monday, a lot of economic news here has been released. You know, we have the disagreements between Ukraine and the United States, between I don't even know what you call him, President Zelensky. I don't know if he's a president, minister, or whatever, but Zelensky and President Donald Trump. A lot of back and forth, a lot of just a disagreement between the United States and Ukraine. We also have tariffs, which were just implemented yesterday night, I believe, Tuesday night. So, I mean, and there's other news drivers as well, but I believe those two fundamentals, or what's kind of driving prices to reach for lower prices here. Here I do want to take a look at this as well. So we actually retraced back into the discount of this dealing range here, right? So on NQ, this is the weekly time frame, by the way. On the weekly time frame, you guys can see that there is a swing low, and I want to note these as a red line. So there's a swing low and there's a swing high. A swing high and a swing low is so a swing low is essentially a 3 candle pattern where the first candle's low and the second candle's low are both higher than the second candle. So this is the second candle, by the way. So as you guys, so there's 1, 2, and 3, right? So notice how the first and second candle, their lows are they're higher, right? It's higher than the second candle's low. So the second candle's low is here. This is what makes a swing leg, right? So there is, a swing leg here, and then we have a lower low, and then we have a higher low. So this would be considered a swing low right here, right? And vice versa for swing highs. So that's the little background about what a swing low is. So if you guys get this swing low here, this significant swing low to this significant swing high, so from all-time highs to this significant swing low, there is a dealing range. Within that dealing range, there is an equilibrium level. So essentially, the equilibrium level is what separates discount and premium of the dealing range. So in this dealing range here, that green box, that green shaded box here, is considered discount. So anywhere in this green box would be considered discount. Buyers want to buy in discount. Sellers want to sell in premium. Right? If you guys think about that in terms of just a regular market, right? If you walk into a store and you see prices on your favorite bag of chips are discounted, right? They're cheaper than usual. Would you want to buy them? Human behaviors typically just, right, you would want to buy them. And same thing here in selling as well, right? As a store, you would want to sell your prices, or you want to sell your items for a higher price so you can maximize your profits, right? If you're able to sell your prices at a higher price and there's still a demand for it, then it's very it's efficient to do so. So if you apply that same logic with discount and premium to the actual live stock markets, right, these ideas are always present as well. So if I know that prices wants to buy in discount here, right? Why not use that as a influence, a confluence for lower prices? Because I know prices likes to trade back into discount for better buys. If I know that behavior, why not look for a short opportunity into discount and vice versa for longs? If I know that sellers are present, right? If there's a seller, there's always a buyer, but vice versa as well. If there's a buyer, there's always a seller. If I know that sellers want to sell in premium, why not take a long into premium, right? And this whole concept of discount and premium doesn't only just apply to the weekly time frame. You can apply that to the 4-hour time frame. You can apply that to the 1-hour time frame. You can apply that to the 15-minute time frame. Swing highs and swing lows are fractal. Like here, on the 4-hour time frame, there's a swing low, there's a swing high. Right? These things are happening, or these things occur on every single time frame, every single day. You just have to have the perspective to be able to see it. So like here, there's a dealing range. And it looks like we traded back into discount, right? So there's the objective. That objective has been met. So from this swing high here to this swing low, it seems that we have already traded back into premium. So these things occur, like I said, on every single time frame, and it just takes a lot of practice, a lot of repetition to really enforce these concepts. But yeah, so that's kind of discount and premium, and that's kind of what I was kind of looking for coming into this entire week, to be honest. I wanted to see prices trade back into this green shaded box, which is, like I said, that weekly discount range. And but yeah, coming into today, not really trying to force anything. I don't want to force anything because of this, like I said, the misalignment between the daily time frame and the 4-hour time frame. If I were to use a time frame for my higher time frame objective, to be honest, it would be based off of this 4-hour candle. And this 4-hour candle, like I said, is suggesting to me lower prices, but I have to find more confluences for this whole trade as well, right? I want to be able to have a higher time frame objective, a model, and a entry pattern. And see here for today. Today I want to review with you guys one trade from last week. So let's actually do that right now. But yeah, how's everybody? How's everybody's days been going? I know it just started. It's pretty early. 8, but hopefully you guys had a good rest, and you guys are ready to tackle today's and have you guys' eyes open for new opportunities and continue to grow. But yeah, so coming into last week, there were 2 trades I took, and I want to go over one of them with you guys here. And I'll go over this one, right? So this one was on Tuesday, February 25th, 2025, and the model was on the 15-minute time frame. So to get into this model here, or I guess to get into this trade, the first thing that I want to take a look here with you guys is what my higher time frame objective is, right? So what is the higher time frame reason? What's the higher time frame order flow? Why should we continue higher or lower? And the answer to that question is, so based off of this hourly candle here, right? My easiest assumption that I can make is that we're most likely going to take out this hourly candle's low, right? It's a pretty bearish candle. suggesting that we're most likely going to take out the hourly low, treating this hourly fair value gap as a breakaway gap, meaning that we shouldn't trade up into this hourly candle's high. So that's my objective, right? That's my daily, or I guess that's my hourly objective. And I just want to see lower prices here for the next hour. And how I'm able to align myself with that order flow, right, is actually on the lower time frames relative to the hourly time frame. So like the 30-minute time frame and the 50-minute time frame. So now I'm going to take a look for, hey, when are these, can I find a 50-minute candle? Can I find a 30-minute candle that aligns with the bearish hourly order flow? And I can find, in this specific trade, I did find a model that aligns itself with the higher time frame order flow, and it's actually based off of this 15-minute candle and this 30-minute candle. Notice how the 15-minute candle here and the 30-minute candle here, their lows are the exact same lows, meaning I can anticipate for the 30-minute candle's objective to be completed within the next 15 minutes. And one thing to also note here as well is that the 15-minute candle / 30-minute candle, they're both suggesting lower prices. For me, I can anticipate that the 15-minute low here is going to be taken. It's reasonable to assume that. Bearish 15-minute candle, bearish hourly order flow. So now that I have those two components in mind, right, the only thing that's left to find is an entry pattern. How am I going to position myself into this trade so that I have a good risk to reward, right? On the 2-minute time frame here, you guys can kind of see and kind of anticipate that there's a 2-minute fair value gap, and this 2-minute fair value gap here should be treated as a gap that gets respected, right? So if we were to trade up into this inefficiency, we should respect the inefficiency, we should respect this fair value gap, and trade in accordance with the 15-minute order flow / hourly order flow, which, like I said, is suggesting lower prices. So whenever prices trades up into this fair value gap, and this is what makes a fair value gap valid, right? So I just released a video explaining to you guys what a valid fair value gap is. This is what makes a fair value gap valid. Because I know the narrative, because I know what prices is already seeking, it's easier to assume that we should respect this inefficiency, right? This inefficiency should be respected if we are to trade in accordance with the 15-minute bearish order flow and the hourly bearish order flow. So whenever prices trades up into this 2-minute fair value gap, I take my entry. Prices respects it. We end up taking out the 15-minute low. After taking out the 15-minute low, what should we do? Expand lower towards the hourly low. So kind of view the higher time frame objective as it's a magnet, right? It's a large magnet. The model is a smaller magnet that aligns, so the larger magnet is already pulling prices lower, right? And the model is like another smaller magnet. It's urging. We're pulling prices down here, right? The hourly objective is pulling us lower. The 15-minute objective, which is lower prices as well, is pulling prices lower. And then the final finishing punch here is the fair value gap to, send prices lower at that specific time, right? Time is key here. You have to understand what specific time frames are doing. And that kind of wraps it up for the recap of last week's trade. Hopefully that was able to give you guys an insight of how I view prices and how I trade. So let's get into the actual live charts here, right? So like I said, My morning objective here, I'm not going to use the daily time frame just because the 4-hour candle here and the 8-hour candle is misaligned with the daily candle. So the daily candle, bullish price action, 4-hour candle, 8-hour candle, complete opposite, bearish price action. So I'm not going to elect to use the daily candle here in this case. It's giving me a directional bias, but the lower time frames is what's going to essentially kind of like nudge me in a specific direction, right? So yeah, coming into this morning, I like what I'm seeing here, right? Bearish 4-hour candle, bearish 8-hour candle. And notice how the hourly low here, this hourly low is the same low as the 4-hour low and the 8-hour low. All three of those time frames are suggesting lower prices, and more specifically, because the hourly low is the same low as the 4-hour low and the 8-hour low, I can anticipate for prices to complete the 8-hour objective within the next hour. This is very crucial as it kind of gives you an understanding of when prices should complete a specific objective, right? It's very useful. So, like I said, I want to see lower prices here. We have about 3 minutes left. However, in 3 minutes, I believe we're just going to have that bearish closure unless we just completely reverse here in 3 minutes. But I would assume that's not the case. But yeah, I really like what I'm seeing here. It just depends on if I can find a model and a fair value gap, right? So let's go into the 50-minute time frame here. So I would noticing, okay, the 15-minute time frame. Notice how the 15-minute candle's low, like I said, is the same low as the 4-hour low. So what can you anticipate? You can anticipate that within the next 15 minutes, we should complete the hourly objective, the 4-hour objective, and the 8-hour objective, all because their lows are the exact same lows. Very, very useful, right? But yeah, let's see. We have 2 minutes left. Very, very interesting so far here. We moved 361 points. That's kind of insane. I want to check out Tesla. Where are we trading at on Tesla right now? So daily time frame, we actually are continuing to sell off quite a decent amount here on Tesla. Very bearish. To be honest, if we break this swing higher, I would consider this as a market structure shift. Right there would be considered a market structure shift. I do want to start getting into long-term investing, but I have to learn a little bit more about that to really get involved. But yeah, here on ES, there's that dealing range, right? Weekly swing low and weekly swing high. Notice how if we create that bearish closure, you can anticipate a retracement back into discount. So that's 10 o'clock, and let's see what we do here. So there's the 10 o'clock. There's the 10 o'clock open, and we actually just completely expanded here. That's kind of interesting, right? Very, very interesting. So right at 10, we spiked up higher. We took out the hourly high, and let's see if we do end up taking out the 4-hour high as well. So that is unexpected, right? Very, very unexpected. So let's see. 4-hour candle, 8-hour candle, both suggesting lower prices. What do we have news at? We don't have news here at 10. Huh. Interesting. Well, yeah, like I said, coming into this morning, I would like to see us take out the 4-hour swing low and the 4-hour swing high. So based on these two time frames here, like I said, suggesting lower prices. But I didn't have a model. My model usually tends to be on like the hourly 50 minutes. But because the 15-minute swing low was the same low as the 4-hour low and the 8-hour low, I can't use the 15-minute time frame as my model, right? That would be considered my higher time frame objective actually, because of the idea called scope. But now that I notice here, like we expanded right at 10, right? We took out the 15-minute high, which was something that I was not anticipating. Because we did that, now I kind of have to pivot here, right? So are we just going to completely negate the whole idea of lower prices? Or are we going to create a bearish candle, right? So kind of depends here now. But yeah, I'm just going to be patient here and just sit on my hands, as right now it's kind of awkward. Like I said, I wanted to see lower prices here for the next 4 hours because of the way that we closed here on this 4-hour candle. Bearish candle, easy to assume lower prices, but there's more confluence that is needed whenever you're going to take a trade, right? You can't just take a trade based off of how a candle looks. You have to have a model and you have to have a fair value gap. I had a higher time frame objective, I just didn't have a model and a fair value gap. So sitting on my hands here, being patient, letting prices do its thing. But yeah, let's go over some of the pros and cons here with you guys. So from last week, I was actually able to take consistent models, right? So like with the trade that I went over with you guys, right? I was able to identify a higher time frame objective. I was able to identify a model, and I was able to identify a entry pattern. All three of those components make up my strategy. And if I'm able to take consistent models, stay disciplined in my approach, and just practice that discipline, that's only going to elevate me as a trader and investor and someone that's going to be working in the financial markets, right? You have to build that consistency and that discipline. Even in investing, long-term investing, there are going to be periods where you might be in a little bit of drawdown. You have to build the conviction and discipline to have faith and trust in your model, have faith and trust in your investments, right? Look long-term perspective here, and the way that I'm doing that is taking those consistent models. If I were to just grab a random trade here within my journal, I would easily be able to identify what my higher time frame objective is, what my model, and what my entry pattern is. So that's the first thing. Second thing, time frame alignment. Understanding that you can only go from one page to another. One page, two page, right? The first page, second page, third page. You can't go from the first page straight to the fifth page in a book or I guess the first page to 50th page in a book and understand what's going on, right? You're going to miss out on a lot of plot. You're going to miss out on characters. You're going to miss out on significant events. And you're just going to miss out on, very key and important information. And that can be applied to the way that you view prices as well, right? So if you guys have noticed already, there's a pattern between my higher time frame objective, my model, and my entry pattern. My higher time frame objective is always going to be on the highest time frame, whether that be the 4-hour time frame, the weekly time frame. My model will always be on a time frame that's relatively lower compared to it, right? So I could go from the weekly time frame onto the daily model, but I don't go from the weekly time frame straight onto the 1 minute time frame, right? Like I said, that is exactly like reading from page 1 straight to page 50. There's so much information that you missed out on if you go from the weekly time frame straight onto the 1 minute time frame. You missed out on the daily time frame information. You missed out on the 4-hour information. You missed out on the hourly information. You missed out on the 15-minute information. You don't want to do that as a trader. You want to be able to obtain as much knowledge and as much confluence as you can whenever you take a trade. So align your time frames correctly. Third, the trade that went over with you guys, it didn't have this example, but SMT. If you guys are a seasoned ICT trader, you guys would understand that SMT is a manipulation indicator. It just essentially it shows you when there has been manipulation in the markets, and usually swing highs and swing lows are always going to be accompanied with SMT, right? And because we know that a swing high or a strong swing high and a strong swing low will be accompanied with SMT, you can kind of reverse psychology it, right? If you see that there is a lack of SMT, that means you can add that as one of your confluences for a continuation. If I know that a swing point, a swing low isn't accompanied with SMT and prices is still continuing to suggest lower prices, then it's a really good indicator for me to follow the trend, right? And I'll go over this a little bit more in detail whenever I do a recap of the trades that I took last week, where this whole concept was present, right? But yeah, it's a very, very strong I guess indicator. All right. And the fourth thing here, selling above the open in bearish conditions and buying below the open in bullish conditions. So if you know that prices is going to create an up close candle, right? Let's just anticipate an up close candle creation here. And you're anticipating that bullish closure. If you are anticipating an up close candle, what is the best buys for you here? That's a question that everybody likes to know, right? Everybody wants to know. The best buys in this case, in a bullish candle in the creation, right, is below the open. That's where you're going to want to buy. That's the best place to buy, right? You're going to buy below the open because that's considered discount. So it's not essentially discount as in, equilibrium, but it's considered discount because if you know that the next candle is going to create a up close candle, then your best buys are going to be below below the open, at the open, or near the open. That's where you're going to be. That's where your best buys are going to be, and vice versa in bearish conditions. And I can explain this concept a little bit more clearly if I were to be going over an example. But yeah, to continue on with my pros and cons. And the last thing here, remaining patient. There are going to be times in the markets where the market conditions aren't exactly favorable for your specific strategy, right? And you have to find that level of patience, that level of discipline to not force anything whenever the markets are like that. Find the discipline to not have the urge to, or it's not that you shouldn't. I mean, everybody's going to have the urge to press the button, right? Everybody wants to be involved in some sort of action. But you have to build that resilience, that patience to not press the button whenever your strategy isn't present. If your trading strategy isn't in confluence, or it's not favorable in the market conditions that we are in, then find that discipline to not press the button. There are going to be days where, you're going to be presented with nothing. You're just going to have to sit on your hands. There has been countless days where I kind of have a understanding of where prices wants to go, but I just don't have a model and I don't have a fair value gap to enter off of. What the best thing for me to do is just sit on my hands, because I know that my strategy that I have for myself prevents me from taking any unnecessary losing trades, right? Like today. Today's a good example, right? Like I have a higher time frame objective. I have an idea of where prices wants to go. But did I have a model? Not exactly. Did I have a fair value gap? No. Because I'm lacking those two components, I'm just going to sit on my hands and do something else that's meaningful, right? And yeah, that basically wraps it up for the pros. And to get into the cons here, they're a little bit, they're trading related, but you can apply these concepts to everything, right? Consistent actions and thoughts that aligns with your goals and your values. What are some things that you can do? What are some thoughts that you're thinking that are aligned with your goals and values? Continue to maintain that consistent alignment between your thoughts and your actions with your goals and your values. And that's the best approach for me, to be honest. Like, every single day I go into that day with the thought, okay, how am I going to align my thoughts and my actions with the goals and the values that I have for myself, right? How am I going to be a better financial advisor? Or what are the steps that I can take to become a successful financial advisor? What are some steps that I can take to become a successful investor? What are some ways that I can become a good human being? What are some ways that I can be a good brother, good son, and a good human being, like I said, in general? So having those thoughts and actions that are aligned with your goals and your values are extremely important, right? Your everyday things, right? Your everyday habits, just those small things, they add up. So continue to be aware of your goals and your values, and align your thoughts and your actions with them. And the second thing that I can continue to work on here is obtaining knowledge and in understanding or creating value, right? Or how am I going to help others, and how am I going to help myself succeed? And what are some skills, what are some things that I can offer to another? And for me, I had to do some deep diving. It took a, it's, I think this is kind of what life is about, is kind of figuring out what you want to do, what your passion is. But I know that I like numbers. I like how numbers work. I kind of like how you can associate everything with numbers, right? I like the financial markets. I like how basically everything is intertwined, and you have to find every little thing about it, right? And being able to be financially literate and having the skills to be able to make good decisions financially is something that's like super fascinating to me. I think it's super fascinating. And being able to help others is also one of my, I guess it makes it, it's one of those values that I have for myself that allows me to wake up and just like have the energy, right? It drives me. And like initially, whenever I first started college, I wanted to become a nurse, right? Because I wanted to help, or actually, I wanted to become a pediatric nurse, right? I wanted to help kids. And the more I dove into it, I found that I can't handle, or it just kind of pains me to see people that are in pain, right? And knowing that sometimes that you just can't help them. And or like I it's just very sad to take a look at, or just to see and just experience. It's really sad. And credit to all those nurses and doctors. They have they have a very strong will. Not saying that I don't have a strong will. I can't see myself working in that field for the rest of my life, right? It's just something that I can't do. So I kind of pivoted, and I thought of another way. Okay, so like I thought of, okay, so how am I going to help others without, helping them, I guess physically? And my conclusion is, I want to be able to help people financially, seeing or helping them make the correct financial decisions, right? And that's kind of something that I want to work on coming into this week. So what are the skill sets? What are some of the things that I can learn and obtain to be able to do that? Yeah, coming into this week, or I guess some improvements in here I can make this week. Continue to take consistent trades. Every single trade that I take, I should be able to identify a higher time frame objective. I should be able to identify a model and a entry pattern. Second, implementing and preaching the importance of time frame alignment. Like I said, you have to understand the full story before you take a trade. So read from page 1, page 2, page 3, page 4, page 5. Don't try to skip pages and be quick with it. You're only going to hurt yourself, right? Because like I said, you're going to miss out on a lot of important information. Third, be patient. Don't force trades. Allow the markets to come to you. And last thing, learn. Knowledge is something that cannot be taken away from you. You can be stripped of all of your appliances. You can be stripped of your computer. You can be stripped of your money. You can be stripped of everything that you own. But knowledge is something that cannot be taken away from you. If you have the knowledge, I truly think that you can, if everything were to be taken away from you, right? If you have the knowledge, you can just rebuild that. If you have the courage, the confidence, the discipline, the will, plus the knowledge, you're able to do anything, right? And I think that's like a really important factor in a human, right? If a millionaire, if someone that's super successful in their work, right? If they were stripped of everything that they had physically, like their house, whatever, but the only thing that's left is their knowledge, I believe that a successful and someone that's reliable should be able to recreate that scenario for themselves within you know, however long it takes, right? All that matters is the knowledge that you have cannot be taken away from you, and that's exactly why you should learn, continue to learn. Let's go back to the charts here. So very, very interesting morning so far. But yeah, my objective here, like I said, this morning, I still would like to see lower prices. I really like the idea of lower prices here because of this 4-hour candle. But I mean, if we end up taking out this 4-hour candle's high, I'm going to pivot, of course. But as of right now, my objective is still for us to take out the 4-hour low. I just have to wait on a time frame, a model that aligns with the higher time frame objective. So that's what I'm gonna leave with you guys, and I think that's gonna be all for today. Thank you guys so much for tuning into today and today's live stream, and until next time, be safe.